Nice seeing you again, Kelly. How are you?
I'm fantastic, Joe. Likewise.
Yes, thank you for again joining us for the Legal Tuesday. I know we have some good questions that were brought to us by veterans and other business owners who wanted to know about the topic that we're going to be covering today. But it's always a pleasure to talk with you and kind of get your experience and your expertise on the legal subject, which we all know that is critical part in business. And that's something that we are very grateful, very thankful to have you on board for this show. And before we get started, I also would like to ask if you could mention about your new book. I know you have a new book, right?
I do. Absolutely. Yes, Joe. Thank you very much. It is the second edition to Go Legal Yourself. My publisher is Wiley. I believe Wiley is one of the largest business related publishing companies in the US. So I was super excited to be partnering with them. And this new book, Joe, it expands on the existing one, but with the new book, it talks about the business legal life cycle. It talks about what does an individual need to do to start, run, and grow their business, right? From a legality standpoint. Plus, it's all in plain English. You don't need another lawyer to translate what I've just written for you. But it's fantastic to the respect that it actually comes with its own website that has a lot of free content on there, such as a free business plan template. Joe, who wouldn't want that, right?
Oh my gosh.
So,
Yes.
and it comes with all these checklists as well. I think it's going to be the best $20 anyone has ever invested in themselves. Available on Amazon.
Did you just say $20?
Yeah, that is it.
Wow.
That's nothing, I know.
Yes. Well, thank you for making that offer. That's really nice.
Yes.
Appreciate that.
Mhm.
So, yes. So, anyways, get your book on Amazon, right?
Absolutely.
And again, what's the title so people can look for it?
Go Legal Yourself, second edition.
Excellent. Well, thank you
Yes.
very much, Kelly. And I think we're
Absolutely.
going to dive into our session today. And before we get started, I know you have a disclaimer for us.
Always. So any information that I share on the show with anyone that's listening, it's only for informational purposes only. It does not create an attorney-client relationship, and I am not giving out specific advice to anyone. So if you want more information on the topics that Joe and I discuss, please reach out. Feel free to email me or give me a call.
Well, thank you very much. And so for our listeners to know, is there a phone number they can reach you at?
760-525-4540. That's my direct line.
That's your direct line. That's your
Yeah.
cell phone number. I don't know anyone who does their cell phone number. Thank you, Kelly.
Of course.
And of course, thank you also for translating the legalese into plain English for us. That's extremely helpful. And that's one of the things that I love about you, Kelly, is how simplistic, how simple you make it, how well you translate those complicated terms into plain English for all of us to understand. Thank you for that.
Absolutely, Joe. You have to be able to understand what you're signing, right?
Oh, absolutely. Absolutely.
Yes.
But so many times we do not.
Right.
Yes, so we think we do, but then it comes back and not really on our favor.
Right.
So our topic today is the exit strategy. We had a few questions throughout the month on people through our social media platforms, and the questions, the topic that came up the most was the exit strategy. Another topic that also came up was how to set up your company for success, which we will be covering that next session. But for this session, uh, setting up for an exit strategy, people wanted to know what is an exit strategy. First of all, well, let's start from that.
Okay. So the timing couldn't be more perfect, Joe, for me to introduce my brand new book, because I am also the creator of the business legal life cycle. So any business, Joe, is going to go through this life cycle regardless of industry. There's going to be a startup phase. There's going to be a growth phase. There's usually an established phase, and then there's also the exit phase. Out of all those phases, which one do you think is the most important?
Well, definitely is the bookends approach, the startup and the exit.
Actually, the most important phase, you got half of it right, Joe. So
Okay.
that means I'll give you half of the copy of the book.
Got it.
Right. So the most important phase of the business legal life cycle is the exit phase. Why? Because it gives you multiple options on how you can exit your business, how you can sell your business, and how you can retire. How do you start a business? How many ways are there to start a business, Joe?
1001.
I'm going to say just one. You just
Oh,
start,
wow.
right? Yeah,
Oh,
exactly.
I just lost my other half of the book.
I know you did.
Oh, boy.
Well, maybe I'm going to give you
Maybe
a
I'll get
chance
extra
to.
credit.
Exactly. I'm going to give
Okay.
you a chance to re-win that book, right?
Sounds good.
But the exit phase is the most important phase, because a individual has worked so hard to get to that point where they can either retire, or, as serial entrepreneurs normally do, will sell that business and will start another business, because this is what we love doing. But if you don't exit your business properly, it could cause you the most legal troubles, if you will, that any business has ever sort of experienced during that phase. So what is an exit? An exit is when you would like to either sell the business, or you want to retire from the business. However, you still want the business to pay for your retirement. Now, that's setting up a business for success right there. Is the company that you've ran and you've worked in is now going to pay for your retirement.
That's a sweet deal.
Extremely, because you're not literally working for someone else where at the end of 20 years you're going to get a nice retirement package, right? No, your business is your retirement package. So you make sure that you have to set it up for success. Now, there are many ways to exit a business, right? One is obviously the obvious. You just want to retire. You know, the timing's right. You're of age to retire. Maybe you want to do some traveling with your spouse, right? You want to leave things behind, but you still want your business to support that retirement. The other way to exit a business is to actually do a private sale. A private sale would be with an individual, someone that's either in your market. It could be even a competitor, but it could be someone in your market who also wants to grow, and you've already done it. So literally you handed over a nicely packaged business with a big red bow on it.
Right.
But it takes time, Joe. It takes time to make sure that business is wrapped up with a big red bow on it. Right. So you've got retirement, you've got sale to a private individual or company. And then you also have co-owner buyout as well. That's if you have co-owners as being part of your business. And then don't forget management buyout as well. People usually tend to oversee that. Sometimes your buyers are right there working for you and you never know, right? So always, if you're looking to sell your business and you have a really good management company that's vested in the business, offer it to them first. You'd be surprised how many management people say yes, absolutely.
Would this management sale will be the same as selling it to an employee, or is different?
It's exactly the same, but on different terms.
Okay.
Because when you're selling a company to employees, that's usually done through an employee stock option plan.
Okay.
Which a company has to set up way at the beginning, rather than a couple of months into, okay, I'm going to retire at the end of the year. So there takes a lot of planning, both mentally and financially too, Joe. You have to be mentally ready, because if you're in a business and you've created it and you've been working in it for 20 odd years, Are you going to be happy? I mean, it's great to take a week off or 2 weeks or even a month, right? But what happens after that? You don't go back to work because you don't work there anymore.
That's
So you
right.
have to be mentally even prepared to actually exit the business.
Okay, that's a good point. And our next question is, well, I guess you answered that already. When should someone start to prepare for the exit strategy? Should you prepare from the beginning as you create your business? Or at which point do you decide to start talking to you, for example, like I want to prepare for my exit strategy 2, 5, 10 years down the road? At which point is that a good time for them to talk to you?
So when you prepare for an exit, I always talk to clients right at the beginning. You nailed it, Joe, right at the beginning
Right.
when you're actually incorporating the business. So we talk about the bigger plans, not the day-to-day plans. What do you want to do with this business? Do you see it? Do you see running this business for the next 5, 10, 15 years? Do you want to sell it to a competitor? Are you even going to be ready to sell to a competitor if you get a great offer? Do you want to either leave it for family? Do you want to actually even start selling parts of the business so your family members can step in and you can retire? You know, why are you starting this business would be a great question to start from. Why are you starting it? Is it just because it's your lifestyle and it's just a little business for you? Or is it something that you're going to support your family with? Is it something that you want to see grow? Is it going to be, nationwide? Or is it just going to be within your state? What are the plans for the business? So based on the bigger goal, you do start. We start to put a plan in place, not to the point where okay, you're going to exit at 17.3 years into it, and then you're going to exit, because obviously your business plan is a live document and it's going to change and move as the situations in your business changes and moves.
Right.
So with exiting, if it's going to be okay, I know I want to retire within the next 5 years, that's a fantastic time to talk to me. Fantastic. If you're going to say, oh, I know I'm going to retire in 3 years, that's a wonderful time to talk to me as well. If you know that you're going to retire in 3 months, that's not a good time to talk to me. It could be, but it's going to get extended because you're not going to be ready to retire
Right.
in 3 months. So the earlier on you have this conversation with an attorney, the better off you're going to be prepared for the exit.
Okay. So, and you talk about the extended time that it takes to go through the process. So, what's involved? And that's the next question. What's involved in the process? Can you give us a breakdown?
Absolutely. The very first thing that has to happen is the company itself has to be incorporated. It has to be an incorporated entity, Joe. It can be
Okay.
a regular corporation, it could be an S corporation, it can even be an LLC, but you have to have an incorporated entity. Then you have to make sure that all of the assets of the company actually belong to the company. For example, if you've got an incredible name for the company, that name should be trademarked, which the company holds. If you drive vehicles, because you're either in the transportation business or you're in the some sort of transportation related business, all those vehicles need to be assigned over to the company. The company has to own its own assets. The company has to have its own bank account. Everything has to be separate. There's got to be company tax returns filed and your separate tax returns filed. I'm actually going through this with a current client of mine, never incorporated, sole proprietor. His CPA said, no, you don't need to incorporate. From a tax perspective, okay, I understand. But from the legality point of it, Joe, he should have incorporated, 5 years ago. He should have incorporated. He's been in business for over 17 years.
Mm.
That being said, now he wants to sell his business. The issues that he's coming up against is we want 3 or 5 years worth of tax returns. Well, he does taxes with his wife as a sole proprietor. And the wife is saying, absolutely not. I'm not giving out my tax returns. So how is this individual supposed to separate his personal assets from the business assets? As a business owner, you want to make it so easy for any potential buyer to look at what you're selling. Everything belongs to the company and you're ready to sell at a moment's notice, right? So the assets need to belong to the company. The name, if not trademark, needs to belong to the company. You have to have your operating procedures in place too.
Okay.
Literally, you're again, if you're going to gift wrap something with a big red bow to someone, when they open it, it should be self-sufficient, right? They should exactly know these are the operating agreements, this is the client list, these are the products, these are the vendors, this is where they get their products from, this is where they do their graphics from, everything, even to the extent of a website. Even the website itself should belong to the company. And also the domain holders should be under the company name and not an individual personally, because along with a business that's been in business for 17 years comes goodwill, and you want to make sure that you pass that on to the new buyers.
You're right. And when you put it like that, it makes sense of so many intricacies when we call the company as a sole proprietor and try to flip it and sell it. Then there's so many changes that have to take place. So if someone is listening, setting up a company, if they have a sole proprietor and they're like, the business is successful and is making what they want to do. So 10 years or so before they decide to exit, it'd be a good idea to talk to you and make the change, make the flip, so they can prepare that package and prepare the business to be ready to be sold in a way that makes sense to the buyer. But you're right, it's so many different steps or things that need to be taken place. And we're not even talking about legal stuff. We're just talking about things, things that take place, assets and names and websites and emails and all that kind of stuff. But yes, that makes sense. That's a good point, Kelly. That's a really good point. So if someone has the corporation status already or the LLC status already, that will be a lot easier, I'm guessing, to make the change.
Absolutely, yes. And that way they can prove to the buyer too that they have actually been in business for X amount of years. Now, for someone that's a sole proprietor and he's been in business for 17 years and now he wants to sell, he asked me, Kelly, should I just incorporate now? Well, the incorporation isn't going to hold those 17 years of experience and goodwill that you've created within the community, because now all of a sudden, you've got a brand new corporation and the buyer is going to look at this like, did you just incorporate? What just happened? Why are you changing your structure? These are all red flags for any potential buyer, Joe. So that's why anyone that is in business, at least think of the two phases, the two major phases, obviously the startup phase, right? And think about the exit phase. How do you want to leave the business? Do you want to leave a legacy behind? Do you want to have your children or your family members take over? Do you have a potential buyer that is a competitor and would love to get his hands on your client list, right? So all of these come into question, and depending on the type of sale, you're going to come across all these different legalities, different legal questions that go along with these different types of sales. For example, you've got an asset sale, and then you also have a stock sale too. So for a sole proprietor to say that, yes, we're going to do a stock sale, it's non-existent because they don't have stock. They're not even incorporated. They can't even sell their own, they can't literally sell their own self.
True.
So exactly. So they would only be limited to an asset sale, and that would be it.
Okay. Well, so that even increases the options and also the intricacies of the process. So to summarize what you're saying right now is that is best to incorporate, to have a separate entity than a sole proprietor when it's preparing for that move, especially from the beginning. So it starts building that equity along the way, and then two, create a system in place. Like if you are ready to be selling the business almost from the beginning, so all the process start to make sense. I mean, you were talking about strategically setting up your vendors, your buyers, your process, your website, your assets, all those things in place, and have them kind of laid out, right?
Absolutely.
And
Absolutely.
then and
Yes.
then it comes with the documents. Are there any specific documents that you will work with these clients to go through the process?
So financials.
Financial.
Balance sheet, the profit and loss statement, any type of financials. You have to be able to provide honest financials to any savvy buyer. Someone that's in the business of buying other companies, they are extremely savvy. They can tell someone that they can tell just from the paperwork that something's either docketed or it's incorrect, and they're not going to move forward with that person even though it could be a perfect match, because you've just lost credibility in their eyes. You
Right.
have to make sure that you actually have separate financials for the business, and you can work with your CPA on this. And nowadays, Joe, you can even use QuickBooks with your CPA, right? That you can print out the P&L
Right.
statement. But keep in mind, sometimes a business can be cash heavy, so cash based. And I know, just saying that we all don't declare cash now and then, right? But if it's a cash based business, you have to be able to show a potential buyer, this is how much cash came in, this is
Right.
how much cash I put in the bank, here are the receipts. So financials have to be always ready to go. They have to be current, and they have to be honest. That represents the business, because it's not revenue that's coming in that a buyer is going to look at, Joe. It's profit as well. How much profit is the
Correct.
company making? Yes.
Yes. And you're totally right. So I in the business side of the house, we see a lot of businesses who are very heavy, cash heavy or profit heavy, but they're also expense heavy.
Mhm.
So great for taxes, like we're talking about CPAs and legalities. Great for taxes, we are paying zero or limited amount of taxes. But when it comes to profit, there's no profit because all is gone through expenses. So when you try to sell something, that works against the sell because there's really no equity. There's no business equity on that transaction.
Exactly.
So okay, very good, very good.
And sometimes, paying a lot of taxes isn't a bad thing. That just means you're making a lot of money, which is
Oh,
a
of course.
great thing.
It's a great thing. Yeah. Yeah,
Yeah.
totally. That makes total sense. That makes total sense. Yes. Now, is any last words of advice for our listeners on, or you want to summarize it for us on how to prepare for an exit strategy?
Absolutely. The big picture, start off with the big picture. Think about where you want to be in 5, 10, 15 years. Think about whether your family's even going to be involved in the business. Think about who would be the perfect buyer for your business. Is it going to be internal? Is it going to be management? Is it going to be a private deal? Is it going to be, again, family member? Or is it just going to be employees? Because you can actually do a employee stock option sell of your business that way too. So think about it early, where you want to be. Make sure early on that every asset that belongs to the company literally does belong to the company. Even if we need to assign equipment to the company, everything needs to belong to the company. Protect the name if it's available. Try to see if you can get a trademark on the name. It gives it more value for the company, because sometimes people just know the name itself. For example, I'm sometimes known as the queen of business law. Right? That's me. But if
Right.
somebody wanted that name, I'd be happy to sell it for millions. Who wouldn't? I've got the
There you
right to
go.
do that, right, Joe?
That's
And
right,
so
because your name.
exactly, every business owner who actually is in business and they are thinking about the long term, start putting a list together. In fact, I'll be happy to share even an exit checklist with you, Joe, so you can post it for any of the viewers to take a look at, and just start early on preparations.
Okay. Well, and I think that would be a good idea if once I redeem the book, be able to post that on the website and on and also on our website, so people can download the checklist for starting and also for the exit strategy. That
Yes.
would be nice. Yes,
Yes.
Kelly.
Yes.
Totally. Excellent.
Wonderful.
All right. So before we go, one more time, if you can repeat the number so people can reach you, where people can reach you at, and your email.
My direct line is 760-525-4540. And my email is kelly@baglalaw.com.
And would you prefer calls or text messages?
I'm getting used to the text messages, but I do
Oh,
prefer calls because I'm still old school, Joe.
oh, okay. All right.
I'm still
All right.
old school. Yes.
So
And
I do have a dial phone. I can use that to call you.
wonderful.
I know. I love those. I love the ring thing.
I know. Or
Right.
they can simply go to my website, which is baglalaw.com, and they'll
Oh,
find all the information there.
we can have that option too. But
Yes.
it's more fun to call you over the ring.
I
the
know.
dial tone.
That's true. That's true.
Well, Kelly, thank you very much for your help and for providing this wonderful information. And we do this once a month. So again, thank you everyone for joining us today for the Legal Tuesday with Kelly, and the best attorney and the most well-prepared, easy to understand attorney I know. So I'm really thankful and appreciate your help, Kelly, for all you do for us and for the veteran community. And thank you very much, and see you next time.
Absolute pleasure, Joe. Thank you.